I'm Taylor Riggs in San Francisco, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, outperformer. The tech sector dominates in 2019. How will it perform in 2020? We'll have some predictions. Plus, optimism tested. Tesla's delivery predictions under the microscope as the car maker starts local deliveries in China. We'll have the latest. And card controversy, though touted as a widely successful launch, the Apple Card issued by Goldman Sachs hit some snags in 2019. Some of the biggest guests on one of the biggest stories of the year. But first, to our top story, and it is tech continues to be the big outperformer in 2019, with the Nasdaq on track for its best year since 2013. The tech-heavy index is up 35%, just 3% shy of 2013's banner year. And it is mostly due to those large tech stocks like Apple and the chip makers. Here to tell us more about what's driving the rally and if it's set to continue in 2020, it is Bloomberg's Abigail Doolittle. And Abigail, I wanted to start and take a look at a chart here that I'm showing on my terminal about the FANG divergence, the winners and losers. What's your takeaway from the divergence of the FANGs?
Well, the clear winners there, Taylor, to your point, Apple and Facebook. Apple just extraordinary, up 85% on the year. Facebook up 55%. The other FANGs up closer to 20 or 30%. Still great gains on the year. And you see the complex overall higher. What's interesting, 2019 really the year of record highs. For the FANG complex overall, the last record high all the way back in July. But those two stocks, two companies really pulling away with the lead, Apple and Facebook. Apple putting in record high after record high. And, you know, behind that buying power, Taylor, you have to think it has something to do with 2018, because between October 2018 and December 2018, Apple fell about 40%. So this year, they pre-announced early in January, setting up relatively low bar numbers, and investors went all in, even though the technicals at that point looked a little bit shaky. But you have to think that some of those traders thought that it would be a pretty sure bet. It's turned out that way again, a gain of 85%. And Facebook last year, Taylor, it was a real disaster. They had a bumpy road, and then, of course, they had that horrible second quarter, that trading day in July, down more than 20%, the worst day in record. On the year, last year down 25%. So another case of a stock that was down more than some of the peers. Investors, traders simply snapping it up, leading to this banner year in 2019 for some of these stocks, and those two in particular.
And Abigail, earlier we were showing a chart of the gains in market cap. How much of the total increase in the indexes can be attributed to the market cap gains made by some of the big FANGs?
Well, take a look at Apple there. It's just extraordinary. This year, gaining more than $500 billion. There aren't a lot of companies out there, Taylor, publicly traded companies that are even worth $500 billion, but that's how much this company has gained on the year. That stock is about almost 5% of the S&P 500. The other four stocks that we're looking at there, when you put those stocks together, about 13 to 14% of the S&P 500. So a pretty good chunk of the gains for the index overall coming from some of those big names. We don't have Microsoft on that board, but that's another piece certainly for the S&P 500.
And I want to come and take a look at another chart here because, Abigail, like I've said on this program, you do technicals better than anyone. And this is showing the RSI of the FANG index. Any concerns here that we're overvalued given the massive run up that we've seen?
Yes, absolutely. Now, the interesting piece, the FANG on top, it doesn't look too parabolic. It looks relatively flat. And again, it's been a while since an all-time high. But even so, and this is probably the more worrisome point, you do have that RSI, the momentum indicator, in overbought territory in 70. What makes it concerning, because a lot of technicians actually don't mind when it goes above 70, and if it stays above 70, even if it goes to 80 or 90, the thing they're looking, though, for is higher highs. You see that RSI rounding back down towards 70. If it goes distinctly below 70, that could be a signal that early 2020 that you could see some bearish momentum, some consolidation of these huge gains, Taylor.
Abigail, quickly here, talk to me about Tesla. We had a series of record highs trading above 430. We're pulling back from that today. Cowen analysts came out really talking about some concerns around demand. What do you make of Tesla?
You know, Tesla is extraordinary, Taylor. It's like a cat. It has 9 lives. It has more than 9 lives. You know, if you think about it all the way back from 2010. That being said, it's the best performing of the auto stock since then. But this year alone, at one point down 50% year to date in that June low. Since that June low, it's actually up 140%. So the bulls and the bears, that huge sentiment whipsaw really shown there by the stock. More recently, investors and traders getting behind the idea that this company can hit some of the delivery numbers, the China deliveries. On the other hand, we have Cowen saying that they might not quite make the number relative to deliveries for 2019, just come a little bit shy. Plus, profitability and mix could weigh a little bit on the fourth quarter in terms of when those numbers are reported. But overall, Tesla on the year, you know, coming back from that huge deficit, it's really pretty extraordinary. And it seems net, Taylor, the coverage for this company and this stock used to be pretty incredulous and probably, I don't want to say mocking, but a little bit of that. It seems as though the street's getting more genuinely bullish, putting aside this Cowen note on the day, Taylor.
Thank you to Bloomberg's Abigail Doolittle. And for more, I want to stick with Tesla, a major milestone for the EV maker in the world's largest market. The first 15 units of Model 3 sedans assembled at Tesla's new multi-billion-dollar Shanghai plant were delivered to company employees on Monday. Joining us from New York to discuss it is Bloomberg auto reporter Craig Trudell. Craig, I want to come and take a look at a chart here that I'm showing inside my terminal, which is EV in China. You know the story. All the bulls, all the bears are banking on China for Tesla. Is today's news enough to solidify Tesla in that Chinese market?
Yeah, you see the red bars in that chart, Taylor, really signify just how much people are expecting China to sort of carry the water for the general EV market. And that's really the case for Tesla as well, and the reason why people have been so optimistic about this company. When you look at the rally that Abigail just talked about, it's a significant portion of the reason why investors are growing so bullish with this company. Obviously, people were willing to give Elon Musk a little bit more benefit of the doubt after the third quarter earnings release when they reported a surprise profit. But really, the optimism that you've seen more recently that this is a company that will be able to unlock significantly more potential in the China market is sort of a bet that's being made here. To answer your question, though, it is a little bit unclear at this point just how much this will have a significant effect on Tesla, because we aren't seeing the price of the Model 3 drop significantly yet. And what we may find is that the company will be able to bring the price down for the Model 3 once it's able to localize more of the content of that car. And the sedans that it's building in the Shanghai Gigafactory are more sort of localized in that market.
Well, and are those production targets for that Shanghai factory realistic this time around?
You know, it's funny. We talk about how much of a heated debate there is over this stock, and part of that is because of the sort of shakiness of execution relative to the predictions that Elon Musk tends to make. This is a CEO that has talked about early on being able to make 1,000 of these cars a week. At some point getting to 3,000, and he's talked about the idea that the sort of long-term demand picture for Tesla in China could be around 5,000 a week. But Cowen, the analyst at Cowen, who we've talked about earlier, who's a little more on the bearish side, is really skeptical that the company will be able to hit those sorts of levels, especially with the government in China sort of pulling back on subsidies. We've seen the EV market in China really struggle the last 5-6 months as a result of that pullback.
And Craig, we heard from Alan Wang, the general manager of Tesla in China, on their goals. Take a listen to what he had to say.
Our goal is to sell all vehicles manufactured at our Shanghai factory. We are confident in achieving that.
I mean, you heard it there. They want to sell all their vehicles in Shanghai. I wonder, though, what is the downside risk here that maybe the bulls are wrong and China doesn't live up to what it says it is?
Well, that's a real question, because this is a company that has not paid a significant amount of money for the factory that they built so quickly. Sort of an under-the-radar development last week was the company securing some financing from local banks for that factory. So this is a tab that they're only sort of paying off going forward, as opposed to something that they've paid for already. And meanwhile, you have a company that, and Musk, a company that has sort of endless ambitions. He's already moved on to the next factory that he wants to build outside Berlin. So, for this rally to be sustainable, Musk is going to have to deliver some sustainable earnings, something that they haven't been able to do up to this point.
Bloomberg's Craig Trudell, thank you for joining us. Now, Netflix says the most popular releases on its streaming service this year were things it produced. Among them, the comedy movie Murder Mystery and the third season of its sci-fi show Stranger Things. Netflix once filled its service with shows and movies from other studios, and it is now relying more than ever on its own programming to keep viewers loyal. And coming up, tech's top themes in 2019 from the big four of tech and more. We'll have the charts that show you what mattered most. That's next. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. WeWork reportedly will have to pay almost $17 million to its co-CEOs if they are fired or leave the company for other reasons. That's according to the Financial Times. The FT says exit package terms were sent to shareholders ahead of a $3 billion tender offer by SoftBank. Now, over at Bloomberg Opinion, they've been looking at the top 8 themes in technology for 2019. From unchecked data collection to Apple shifting to a services-based business model, Bloomberg's Shira Ovide broke it down into 8 different charts looking at the past year. She joins us now from New York, and with us in Washington, it is CFRA's Vice President of Equity Research, John Freeman. Shira, let me start with you. One of my favorite charts was the continued frustration between tech management and the employees. What have you noticed about the increasing tension between the big tech management employees?
Look, this is not a new issue, but it has become louder, I think, in the last year, where you've seen, particularly at some of the large companies like Facebook and Google and Microsoft that have an outsized impact on the world. Their products have an outsized impact. You've seen more agitation internally from employees who are both concerned about internal issues, things like pay equity or sexual harassment policies, and external issues in terms of how their products are used in the world, whether it's environmental destruction or concerns about working with government agencies or harmful effects of products like social media.
John, at what point, if at all, do you incorporate this into your fundamental analysis?
Well, that's actually an interesting idea. I mean, I think for me, what I like to look at as I'm gauging the trajectories of these companies, and in this case, sort of that management versus sort of employee sort of equilibrium. I mean, look at the unemployment rate in Boston and the Silicon Valley. I mean, it's incredibly low. So I think probably more than any other time that I can remember, perhaps maybe since the 90s, you've had the techies, the programmers, the people who are working, actually have a lot of leverage. They have a lot more leverage than they did, I think, historically. So I think there are things that they can do to enact positive change. And I think at the end of the day, obviously if it's measured and reasonable, I mean, I think it can be a very positive thing.
Shira, another chart as I scroll down the list that stood out to me was the rise of TikTok. Are the headwinds, the CFIUS review, the government scrutiny of TikTok outweighing the tailwinds, in your opinion?
We'll see. I think that's TBD. Also, the other issue with TikTok is that they are spending a lot on advertising to get downloaded on people's phones, and it remains to be seen whether that app turns out to be a fad. But look, you have to give them credit for making this kind of addictive short video app that many millions of people in many countries around the world have really fallen in love with. And it's given us some pure moments of joy, maybe one of the few moments of joy in 2019.
John, as you take a look at TikTok and even some of the other big tech, the increased regulatory scrutiny, the CFIUS review, the antitrust rhetoric, how does this all impact your view of big tech?
Yeah, I mean, frankly, for Facebook and Google specifically, I think that regulation is the biggest risk. It's really the only risk that matters, I think, for 2020 and 2021. I mean, otherwise, those businesses are on rails, and they're, fundamentally, they're doing extremely well. But yeah, the big difference I see is how the companies handle it, how they manage the risk, and on that front, Google is, doing much better, I think, than Facebook. Facebook still needs to learn how to deal with Washington, how to be more proactive. I think the Libra cryptocurrency, effort right after the Judiciary, Committee had come out and said, we're going to investigate social networks more to see what their, perhaps nefarious influence on elections are. And then 3 weeks later, they're, announcing Libra, and I think that ticked a lot of people off here. But so I think. I'm hoping that Facebook sort of learns and kind of follows in the footsteps of Google in terms of how to manage regulatory risk, so that, because it's coming, but it can be very mild and well placed, and actually, in terms of data privacy, in my opinion, it could actually be a clarifying moment for the market, and actually boost the use of data, more of a data market, but with all of the users keeping the privacy and control of the data that they don't want out there. I mean, I think that we need more progress on that, and I think regulation can help.
Shira, the third and final chart that I wanted to point out was Amazon's, their might and their blind spots. And they showed us this holiday season that they are a logistics company. What do you feel are Amazon's successes and their blind spots?
Well, I think the logistics data point that you mentioned is really instructive, because it's not glamorous, but you have a company that in a very short time has transformed from one that is mostly reliant on the package delivery companies like the U.S. Postal Service and FedEx and UPS to a company that now, at least by Amazon's telling, is handling the majority of packages itself. And that is a very fast turnaround. That these are the kinds of things we want large companies to do, to be able to fundamentally change what they do. And I give them enormous credit for that. At the same time, Amazon's strategies and its products come with enormous downsides. And the company has really been unwilling, in my view, to reckon with those downsides, right? So the downsides of its package delivery operation is you have stories about the company prioritizing speed and efficiency over the safety of drivers and the public when you put drivers on roads who are under extreme pressure to deliver packages, very enormous volumes of packages very quickly. You've had similar stories about working conditions in Amazon's warehouses and about some of the lax standards of products sold by its third-party merchants. So there's enormous downsides that come with the might and power and influence of Amazon.
Bloomberg, Shira Ovide, thank you for joining us. And John Freeman, you are going to be sticking with us, and we'll be taking a look at your 2020 tech preview. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg. We are back with CFRA Vice President of Equity Research, John Freeman, with his calls for 2020. They include Alphabet's Google Cloud offerings, Oracle undergoing a big reorganization, and Facebook entering the cloud business. So, John, it was shocking to me, pretty bold call. How do you see Facebook entering what is a pretty crowded cloud business?
Well, it's crowded at the application layer. So you have Salesforce and all of the different, software as a service companies. But in terms of infrastructure as a service, essentially what Amazon does, the AWS service, there are really only three competitors. There's, at least in North America, there's Microsoft's Azure, Amazon's AWS, and Google Cloud. Google Cloud being a relatively new entrant that went from kind of zero to now it's above a $8 billion annual run rate. I think the thing that distinguishes these guys is obviously they've done a lot of innovative stuff, particularly Amazon, which was first, but it's scale. Facebook, Amazon, Google, and Microsoft operate data center infrastructures, cloud infrastructures that are orders of magnitude larger than anybody else. And so that's the ticket to entry. And so from my point of view, it's like, why wouldn't they? And I know they've discussed it. I mean, I don't have any idea that they will, but it just makes total sense. And it would give them regulatory protection. I mean, they would be the last entrant into a market, of three players, they'd be the fourth, right? So they would probably avoid a lot of the regulatory scrutiny that they would get, particularly if they do something in the consumer space or try to expand through acquisition or that kind of thing. It just seems like low-hanging fruit that they could just take right off the tree.
Well, and John, you talk about the other three entrants in that market, which another one of your top calls is that Google's cloud will make significant roadway into that. But how do they keep up with an Amazon and a Microsoft, which have dominated up until this point?
Yeah, no, that's it. So again, I think scale puts you in the game. Now, one of the things that Google has done is they've differentiated, particularly on the analytics and on and getting developers to use their TensorFlow framework for machine learning, for AI, effectively, right? And they are, Microsoft and Amazon are sort of involved in that too. But I think that's one of the things that Google can do to differentiate. And TensorFlow is very popular among developers, and the developer community is always a great, leading indicator of what's going to be successful, what's going to be adopted.
John, finally here you look at Oracle splitting up hardware and software.
Yeah, I think it's time. I think there have been a couple of decades of acquisitions that were really targeted at the client, the old client server sort of world where you wanted to give an enterprise customer, we'll give you the database, the operating system, everything, full, one-stop shop kind of value proposition, and that was effective. But in a cloud world where most of these enterprises are now trying to, outsource, right, their infrastructure to, the Google and Amazon and Microsoft Azure, that value proposition actually turns around, and I think it hurts Oracle. They're not able to do deals with their database on their database side because, the application side competitors get worried and vice versa. So I think there's negative synergy that they can unlock a lot of value by doing so.
Okay, we will wait and have you back in a year at least to find out. Thank you to John Freeman of CFRA Research. And coming up, we continue our look back at the best of Bloomberg technology in 2019, and we'll hear from Apple co-founder Steve Wozniak on his gripes with the Apple credit card. That's all next. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. Now, Bloomberg was first to report that Goldman Sachs was being investigated for alleged discrimination over its Apple Card algorithm. Social media postings in November by a tech entrepreneur and Apple co-founder Steve Wozniak complaining about unequal treatment of their wives ignited a firestorm. Bloomberg Technology's Kurt Wagner spoke with Wozniak from San Jose.
There were a lot of articles saying, it was alleging gender bias as the only possible explanation. And my wife thought that at first. I didn't. I never used those words and never say that because I know that Apple itself, for example, is the least biased of all the companies, the least discriminatory. We're the only big company in the United States, I think, that guarantees equal pay for equal work by gender. So that was out of the thing. And it was Goldman Sachs. And you know what? They've listened. Maybe because because I got involved. I don't like to get special privilege just because of my past, but they got involved and they thought it out, and they're really going to make the changes very soon that will allow you to get to a human. I don't believe looking into the algorithm is the solution. I don't believe that that changing the algorithm is the solution. I think it's somehow being able to get individual attention in cases that the algorithm misses.
Steve, you did mention that part of the problem here is that when you're trying to get someone on customer support for a company of this size, it can be really hard. You said it's too big. Were you talking about Goldman Sachs there? Were you talking about Apple, or maybe a little bit of both?
I'm talking about all the big companies. It can be hard to get to. Apple's actually very good because you've got personal support, human-to-human support in the stores with the employees, with the Apple, the geniuses. And if you got Apple Care. So Apple does a really good job of making good support available. I decided a long time ago in my life that having a good product isn't even as valuable as having good support for whatever you get.
Obviously, when you choose to weigh in on something like this, especially Apple related, it's probably going to get a lot of attention. You said you were a little surprised by how much attention those tweets got. You also mentioned the response you got from Goldman Sachs. Did you hear from Apple as well?
We didn't. I don't think we heard from Apple directly. They were actually contacting my wife, who had contacted them way back months ago and called the phone number, and I guess they had her number to call. And you know what? They said that they're going to have their standard number by the end of the week. Now they were telling us by tomorrow, I guess, is going to actually go through to support people. You know, the idea is to get to humans. And you can't expect instant solutions because there might be, you know, too much income, too much demand and not enough supply for a while. But I'm glad they're talking just exactly right, the way Apple would handle something like this. You know, we're going to get on and we're going to support the customers.
That was Apple co-founder Steve Wozniak. Now, as for Goldman Sachs' response about the Apple Card controversy, CEO David Solomon shared the bank's perspective of the Apple Card launch with Bloomberg's Francine Lacqua. She talked to him at the Bloomberg New Economy Forum in Beijing.
I'd start by saying that we're very excited about the launch of the credit card. This partnership with Apple has allowed us to offer a credit card that we think gives consumers more information, more flexibility, the ability to do more digitally, and the launch of it by any standard has been the most successful co-branded credit card launch to date. There is no gender bias in our process for extending credit. We don't ask whether when someone applies they're a man or a woman. We don't ask if they're married. And in addition, when we set up our credit processes, as is required under law in the United States, everyone brings in to all credit card platforms a third-party consultant to make sure there are no unintended biases in that process. You just used the word black box. Actually, when you look at our credit process, any individual that applies for the card, we can go look at the exact specific characteristics of why a credit decision is made and communicate with them about that credit decision. And so one of the things we're trying to do is increase the transparency, and we're going to continue to work at that.
So there was no bias?
There is no bias. There is no bias. Now, there's no question that different applicants can get different results, and that can be for a variety of reasons. But we're working, and we're going to be very focused on making sure people understand that when they apply individually for credit, there are a whole variety of factors that go into it. Gender is not one, but it's their individual credit. And we're going to work over time to do more to deliver transparency to our clients, because that's one of the things that we like about this credit card. How can you have more information? You go on, you apply, you're immediately told what your credit line is. If you don't like your credit line, you can call someone, talk to them, give them more information, and there can potentially be a change. So we're excited about that transparency, and we're committed to working with Apple to improve that transparency so that it's a unique and differentiated product.
That was David Solomon, Goldman Sachs chairman and CEO. Now to the relationship between big banks and tech. The chairman of Europe's largest bank, Santander, says the two are intertwined, but that regulatory restrictions must be addressed. Anna Botín sat down with Bloomberg's Eric Schatzker in November for an exclusive interview.
What is a bank? What is a bank? Does a bank just take deposits and make loans? Of course. But we do payments. We have always, and our strategy, and by the way, you haven't asked me this, but our strategy at Santander since I arrived is to be a responsible bank and grow loyal customers. Loyal customers, if I ask you, Eric, who is your bank? You're going to have one bank in your head, even though you might have 5 accounts. Am I correct?
That's true.
right? So you're like 99% of Americans and most people around the planet. And so for that to be the case, I need to know you, and that's based on data. So my question to you is, why should data be regulated, now I'm talking about Europe, in a different way if you're called a bank or if you're called something else? You know, you as a customer should be able to ask me to share my data, but vice versa, also from other players, so I can give you a loan at 6% instead of 7%. So that is all I'm saying is we need a fair playing field and distinctions between sectors. This is not just about banks and payment companies. It's about, you know, transport companies, hotel companies. And so this is the issue we need to sort out.
Some of the big US banks, JP Morgan, Goldman Sachs, and Citigroup have started forming partnerships with tech companies to provide financial services.
Right.
Will Santander do that too?
We've been doing that. You know, we're 100% in favor of innovation. We've partnered with a company called Cabbage, Ripple, many American companies. So what we're doing is we want to take these companies and services. When we don't approve a loan, we pass it on to, in this case, Cabbage. Ripple is at the base of our OnePayFX blockchain base. So this is exactly the point. We need everybody else to be open. So my question to you, what is a critical infrastructure in the digital age? So we used to say telcos were critical infrastructures. Isn't a device a critical infrastructure?
Could make that argument.
Digital wallets. You know how many people have a digital wallet in the world today? More than 2 billion. When you have a digital wallet, who should be part of that arrangement? Is it just the user and the, you know, let's say the phone provider, or should it be whoever is issuing the card also? These are the things that we need to make sure we have clarity on.
That was Santander Chairwoman Anna Botín. Now, coming up, a conversation with the co-founders of Grab. From ride-sharing to food delivery, we look ahead to the future of the Singapore-based tech company. This is Bloomberg. Let's take a look at today's top tech calls. Aegis Capital's Victor Anthony raised Facebook's price target on the prospect that the stock will power through the regulatory and antitrust risks it faces in 2020. He boosted the price target to $300 a share from $235. The analyst views Facebook positively given continued strong user growth, continued share gains in global advertising, and progress on monetizing Messenger and WhatsApp. CrowdStrike was added to the conviction list at Needham, which forecasts strong growth for the cybersecurity stock in 2020. Analyst Alex Henderson named the stock our single best idea in security for 2020, reiterating a buy rating and a $92 price target. Rapid growth is delivering significant leverage to the business model, the analyst wrote. And Tesla tumbled Monday after analysts at Cowen said vehicle deliveries may miss the company's target this year as Model 3 demand slumps. Excluding the Netherlands and China, we expect Model 3 deliveries to be down compared to the prior quarter and the year-ago period. That's according to analyst Jeffrey Osborne. He wrote that in a note. And those were a look at the top tech calls. Now, about 40% of Singaporeans have poor access to banking and financial services, but two Southeast Asian companies are looking to change that. Grab Holdings, a Singapore telecommunications, are teaming up to apply for a digital banking license before the year's end. The Monetary Authority of Singapore unveiled plans this year to grant as many as 5 virtual bank licenses to boost competition and innovation. Several other groups have expressed interest in applying, including billionaire Alibaba founder Jack Ma's Ant Financial. And speaking of Grab, co-founders Anthony Tan and Hu Ling Tan, no relation, are both from Malaysia. They met at Harvard as MBA students. The two spoke to Bloomberg's Emily Chang in an exclusive interview in May. We'll hear how they have their sights set on making Grab a super app.
It's not just SoftBank. I mean, if you think about it, in fact, the first $3 billion wasn't raised by SoftBank. It was raised from Toyota to Hyundai, to Booking, to Microsoft, Ping An, Oppenheimer, right? You talk about we're very, very blessed with sort of the global best names one can imagine.
But why continue to raise money rather than going to the public markets?
Because of our super app ambitions, which now involves a much broader set of services for our customers, there needs to be additional innovation and additional investments. And those are the investments that our partners, they identify the opportunity and they're like, we understand, we want you to do it. In fact, they're encouraging us to go bigger, bolder, and better so that we can just serve Southeast Asia more consistently.
Tell me about your relationship with Masa. You've said that he's told you you can have unlimited capital from him. And yet I assume you're probably not asking for unlimited capital.
No, that means unlimited dilution. Masa and I are extremely close, and we're very blessed to have a mentor, a personal mentor, and a friend and partner in this journey. But I will not right now need that capital or want that capital today because we have enough capital to invest in what we need today.
So Ling, you recently told me you surpassed $1 billion in revenue last year, that you're on track to double that this year. Where is the growth going to come from?
I think in terms of countries and regions within Southeast Asia, the biggest trajectory and growth area we've seen is Indonesia, and we're doubling and tripling down there as well.
How far away is profitability?
In certain markets and certain verticals, it's actually already profitable. Now, for us, it's really important that we build and create more value, right? It's very easy to say, hey, you're the most popular app, and then just be like, oh, chill, right? Or as opposed to, hey, we're the single most popular app, but there's lots of competitors, so we need to make sure we deliver more value so that we earn the right of customers to keeping us as the single most popular leading ride-hailing app.
Uber can't say when it will be profitable, and that has been a problem for investors. Are you learning from that?
It's different. It's different. So first of all, Uber, majority of its business is ride-hailing today, plus obviously a food delivery. Lyft as well as ride-hailing. The point is, we see ourselves, our comparable is more WeChat, right? As a super app.
So will Grab go public?
Right now, we have no plans to go IPO. We don't need to go IPO, hence that very big round. For us, again, choosing long-term strategics, again, as part of our Tech for Good, working and co-nation building, is when we talk about nation building, it's not 5 months. It's the next 5, 10, 15, 20 years.
Given the US-China trade tensions and manufacturing that seems to be leaving China and moving to Southeast Asia, does Grab have a role in that? Is that an opportunity at all for you?
What I can share about the States and China is that both regions are equally looking at Southeast Asia as huge future potential growth areas. I think everybody sees Southeast Asia as a region of growth for the future, and it's not short term. It's not for the next 5 years. It's going to be for the next few decades, and that's the growth we want to help drive and lead and grow for the rest of the country.
We've seen many founding teams fall apart. There's blood on the floor. You guys seem to have a great working relationship. How do you maintain that?
We've just had an amazing relationship because we share that foundational value system. We also share that passion and vision for what we believe we can contribute back to the region. And we do know that it's unique, and hence why we cherish and value it even more. At the same time, we also know that there are many more opportunities for others like us to equally find the same passion. So we encourage it. In fact, we are helping back in the region. We've launched something called Grab Ventures Velocity. It's our own accelerator program to help other startups in the region who are trying to do good, trying to find scale, using our platform, using our access and partnership. We're trying to help them as well because we were able to stand on the shoulder of giants, and we're hoping that we can help give them a little boost that they all deserve as well.
That was Grab co-founder and CEO Anthony Tan with Huling Tan, also Grab founder and chief operating officer. And still ahead, how one hacker and ex-convict now uses his skills to earn an honest living. We'll take a closer look at the multi-million-dollar industry of bug bounty hacking. That conversation next. This is Bloomberg. Tommy Duvall used to break into websites illicitly, but after serving time for his crimes, he now uses his hacking skills to earn an honest living. He has now earned more than $1 million, enough to afford 2 very expensive cars. He says he still gets the adrenaline rush when doing his job, known professionally as bug bounty hunting.
This is a classic Nissan Skyline. It might look like just another car, but owning one of these makes you an instant star among car enthusiasts. And this guy's so rich, he owns 2 of them. He affords these luxuries not by toiling away at a 9-to-5 job like the rest of us, but by breaking into websites and getting paid for it.
My name is Tommy Duvall, and I'm a hacker.
The businesses Tommy hacks are headquartered in cities like New York and San Francisco. But Tommy works out of suburban Virginia. All the hacking he does is legitimate. In arrangements called bug bounty programs, companies like Verizon and General Motors pay him to look for security holes in their systems so they can fix them before the bad guys get in.
When you find one of the ones that you know is going to be like $5,000 or $10,000 payout, it's just, you can feel your heart racing faster, and it's just like doing drugs. I don't want to go too into detail on with comparison with that. But that's just, you get that same sort of rush.
For some time now, tech companies have employed legitimate hackers to test their systems. But over the last decade or so, bug bounty hunting has become much more organized, thanks to the emergence of websites that match freelance hackers with businesses. The prize money has now gotten big enough to make this an actual career.
What's the most money you've made on a bug?
A single report is $20,000.
What about in a single day?
A single day, $160,000 in October of last year. And I think that only took 3 or 4 hours worth of actually working.
So if you were to average it out, how many hours a week would you say you work?
5 to 10.
5 to 10 hours a week. And how much money have you earned over the last year?
This year, $636,000.
What do you think is the thing that makes you so good at it?
Just the fact that I've been doing it for so long.
I thought Tommy was going to be something like a lawyer or a doctor. Tommy was very, very smart. And he was so much ahead of everybody else in the class.
In our classes, you could play on the computers when you finished all your work. I'd finish my work in 10 minutes and then just go play on the computer.
It didn't take long for Tommy to fall in love with the internet. And one day, he stumbled into a chat room where people talked about their illegal hacks. They taught him their tricks, and he started hacking for fun. The first time he got caught was when he was in high school. He was expelled, spent a few weeks in juvenile detention, and was ordered to stay away from computers. But he didn't listen.
We got into NASA computers, the U.S. courts, Department of Energy, anybody that had huge budgets that should have had secure systems, but didn't.
And he was caught once again, but this time as an adult.
The judge told me if I get arrested for computers again and come to his court, he was going to give me life in prison.
For most people, bug bounty hunting is still more of a side gig than their primary source of income. You get paid only when you're the first to report a bug, and even those payouts don't amount to very much. On one platform, called HackerOne, the vast majority have earned less than $10,000 over time. But if you're really good, you can make a lot more. Out of HackerOne's 500,000 contributors, Tommy's among just 6 people who've earned more than $1 million. As more and more of the world moves online, cyber attacks are only going to grow in frequency, in sophistication, and the havoc that they'll wreak on our lives. And that means we're going to need a lot more of the good kind of hackers, testing our systems to make sure we're safe. But Tommy won't pretend his motivations are all that noble.
The fact that we're securing the internet, it's a nice side effect, but I do it for the money.
That's part of a Next Jobs episode, a mini documentary series hosted by Bloomberg Technology's Aki Ito. You can watch the rest on Bloomberg.com. Now, speaking of hacking, Microsoft is suing a group of hackers with ties to North Korea. The group, known as Thalium, has been breaking into Microsoft accounts and stealing sensitive information by impersonating the company. The hackers allegedly targeted government employees, human rights organizations, and university staff members. And Hollywood actress Sharon Stone is back on Bumble's dating platform. The matchmaking app reinstated the Basic Instinct Stars access. It had been suspended for hours after several users complained her profile was fake. Stone went on to Twitter to lament her suspension. That led to Bumble unblocking her and telling Stone, "We hope you find your honey." And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology and be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.